Hi, welcome to a video on the financial statements. What I thought I would do as an introduction is I would show you the end product ultimately for publicly traded companies as the CPAs in the company and the accountants. It is our pleasure, is our honor, it's interesting work to prepare this annual report. And over your curriculum, you're going to learn everything that's in there. It is also our duty, our privilege, and our important role in society to audit, to provide an external audit of these financial statements in this annual report. So in this first video, I'm just going to generally show you what's in here. And then you'll see a couple of videos where I take a look at the two of the classic financial statements, the balance sheet and the income statement. Again, remember where we're at. In the last module, we did the accounting worksheet. We closed the books, and then all the permanent accounts were ready for the balance sheet, and all the temporary accounts, the revenues and expenses, the gains and losses, we're going to go to the income statement. So here's the final product. And this, I'm demonstrating it in the context of the Target Corporation. The reason I like to do this is that you'll have frame of reference, context for what these numbers are as we look at them. So this is what we call the Form 10-K, which is a Securities and Exchange Commission required filing of companies that are publicly traded. That means that they have stock or bonds on stock exchanges and bond exchanges. Target has both. Okay, and so in here, you'll see there's the table of contents, and so it goes with it says something about their business. What's Target's business? What are their risk factors? Are there any unresolved staff comments? How's their cybersecurity? What properties do they hold, have rights to? What legal proceedings exist against them? Any mine safety disclosures? That's not going to be a big one for Target, obviously. The market for the registrant. The Target is the registrant. Their common equity. The related stockholder matters, and issuer purchase of equity securities. You'll learn what all that means over the next several years in accounting classes. Item 6 is reserved. That's usually means it doesn't apply to this particular company. Item 7 is an especially interesting section. The management's discussion and analysis of financial condition and results of operations. Here, management provides context on all the numbers you see on their balance sheet and their income statement. Item 7A, they're going to talk about the quantitative and qualitative disclosures about market risk. So they're going to tell you about the market risk that exists in your investment. Item 8 is the financial statements and supplementary data. We'll show you those in the next video. Item 9, changes in and disagreements with accountants on accounting and financial disclosure. If there are any, they have to be discussed here so the user understands that the auditor and the company didn't agree on everything. Item 9A is a discussion of the controls and procedures at the company. You'll learn a lot more about that in the Accounting Information Systems class. Item 9B is other information. Item 9C, disclosure regarding foreign jurisdictions that prevent inspections. Are there any foreign subsidiaries in this that the government does not allow the auditors to come in and audit? In part 3, we have item 10, who are the directors, executive officers, and how's the corporate governance at the company? So you learn about their management and their board of directors. What does their executive compensation look like? How much stock do they own? Security ownership of certain beneficial owners and management and related matters. There, we can learn about what incentives they might be facing. You'll learn more about that. Certain relationships and related transactions and director independence. The principal accountant fees and services. How much do they pay the external auditors and other consultants? Exhibits, financial statements, schedules, and then a Form 10-K summary. So that's what's in there. Okay, and so over the years, you're going to see a lot of this. Here's the business. For example, the General Target Corporation was incorporated in Minnesota in 1902. Our corporate purpose is to help all families discover the joy of everyday life. We offer to our customers, referred to as guests, everyday essentials and fashionable differentiated merchandise at discounted prices. We operate as a single segment designed to enable guests to purchase products seamlessly in stores or through our digital channels. Since 1946, we have given 5% of our profits to communities. Okay, and then so that's hopefully that you agree that's what Target's business looks like to you as one of their guests. Here's their strategy. Our strategy aims to expand Target's relevancy in consumers' lives and drive traffic, sales, and market growth. Core elements include delighting with newness, style, and value by strengthening our brand's portfolio, curating leading national brands, and expanding the breadth and depth of signature partnerships, delivering value by providing everyday low pricing and leveraging promotions and our loyal ecosystem Target Circle, opening new stores, updating existing stores, and enhancing our digital experience to reach more consumers and provide a reliably convenient, easy, and inspiring shopping experience. Being a favorite discovery destination by making it easy for consumers to discover Target's products and experiences across different channels and touch points, including our stores, our mobile app and website, and social platforms. And expanding our capabilities, such as our Roundel advertising business, to leverage our assets and enhance the guest experience. Our strategy defines how we'll continue to differentiate Target, and that's shown there. So you can pull this up. This is, of course, available on the internet. I encourage you to read through it. And by all means, when you're going to apply for a company, read through their annual report, and you will know more about the company likely than the person that's interviewing you. They'll be impressed. Okay, and there's a little bit about the sales, some visuals about the sales, and here's financial highlights. There's several of their owned brands and exclusive adult beverage brands, customer loyalty programs, human capital management, talent development and engagement, diversity, equity, and inclusion, compensation benefits, workplace health and safety. A little bit about the company's working capital, its competition, its intellectual property, its geographic information, and other available information. There's its executive officers. There's its risk factors. Very interesting. I'm actually eyeballing them as I read them. I encourage you to look at them. And then that's still the risk factors. There's legal, regulatory, global, and other external risks. So anyway, as you can see, this is really interesting and granular information. Here's the financial risks of the companies. There's their properties. Do you ever wonder how many stores they have in any particular state? Well, they have 35 in Missouri, where I'm sitting right now, and that encompasses 4.6 million, because this number is in thousands, so 4.618 million square feet of store space in the state of Missouri. Overall, they own, of the 1,956 stores they have, 1,532 of them, they own the facility. They lease 264, and then they own buildings on leased land in the case of 160 of their locations. Okay. There's the legal proceedings. They have significant legal proceedings. Okay, the market. That's what their stock has done over the last several years. So if you've invested in Target, this is Target. It's done quite well. This is an index of what you would have done had you just owned a diversified portfolio of stocks. And there's the peer group. So they've slightly outperformed their peer group of companies. And then starts the management discussion and analysis. This is just always a fascinating section to read, and it's very, very informative about what drives the company's profitability or lack thereof. Lots of information. And again, all prepared by us. A very interesting, fulfilling job that prepares you very well to be an executive in a company. Similarly, auditing these is a very interesting and fulfilling job. Item 8, remember that's the financial statements and supplementary data. Okay, so here's the 4 financial statement, 5, and including the statement of comprehensive income in addition to the income statement. So we have the consolidated statement of operations. That's another word for the income statement. We have the statement of comprehensive income. You'll see what that is. Let's not worry about that right now. It's a small addition to the income statement that involves certain gain-loss items that are not in the income statement for various reasons you'll learn over the time in our program. The consolidated statements of financial position. That's the balance sheet. And I should say sheets and income statements because we provide 3 comparative years of income statements and 2 years of balance sheets. The statements of cash flows, 3 years of statements of cash flows, and the consolidated statement of shareholders' investment. And we'll learn to prepare all of these. There are then the notes to the consolidated financial statements. They refer to items on the financial statements, and they provide much more granular information. So here's some information about the significant accounting policies that were used. Here's the information about a sale of a business segment that was made. Here's more about their revenues, more about their cost of sales and their selling general administrative expenses. Consideration received from vendors, advertising costs, fair value measurements, what's in the cash and cash equivalents number, much more about the inventory number on the balance sheet, much more about the other current assets, the property and equipment, the other non-current assets, supplier finance programs, accrued liabilities. Remember, we accrued liabilities in the last module. Commitments and contingencies, commercial paper and long-term debt. You'll learn what that is in Financial Accounting Reporting 2. Derivative financial instruments. You'll learn about those in Financial Accounting Reporting 3. Leases, Financial Accounting and Reporting 3. Income taxes, a little bit in each class. And of course, a lot in income tax class. Other non-current liabilities, and so on. Now, we get to the report of management on the consolidated financial statements. And here management is saying management is responsible for the consistency, integrity, and presentation of the information in this annual report. They're saying we prepared it and you can trust it. And they even have to sign it. There's the chief operating officer and chief financial officer and the chairman of the board and chief executive officer. I know this is little print, so please print off or look, have it with you so that you can look at what it says. And then we have the report of the registered public accounting firm, the opinion on the financial statements. This is the result of the audit. So the auditing firm here is Ernst & Young. That happens to be the company I worked for many years ago. And then the opinion, you're going to learn how to do all of this in auditing class. You're going to audit the financial records, the journal and the ledger, and other information and other schedules, and then you're going to render an opinion. Here's the opinion of Ernst & Young. We have audited the accompanying financial statements of consolidated statements of financial position of Target Corporation, heretofore known as, or from here on out called the corporation, as of February 3 and 2024 and January 28, 2023. Now, those are odd dates, aren't they? This is real common in the retail industry because it allows all of the holiday sales that are going to be brought back to play out so that we have less estimates about the returns and also now additional gift card uses. The related consolidated statements of operations, comprehensive income. So they've audited all of these. We have audited in accordance with the standards of the Public Company Accounting Oversight Board, the corporation's internal control, blah blah blah. And the report is dated March 13, 2024, and we expressed an unqualified audit opinion. Unqualified is what you're looking for. That means that they're saying that they reflect fairly and they don't need to make any qualifying statements about, well, everything but this reflects fairly. So it's unqualified. You're going to learn all of that in auditing class. Here's the basis for the opinion. Here's what they did. Here's any critical audit matters they want you to know about. And there's the signature. Here's the description of a matter they wanted you to know about and how they addressed the matter in their audit. Look at that at your convenience. Okay. There's the report of management on internal control or financial reporting. That is saying that we've set up a good system of processes to prepare this statement. Here's the Ernst & Young agreeing that they've set up a good system to prepare these statements. They're trying to provide the user with comfort that they can believe the numbers that follow. And then we get to the financial statements, which I will look at in greater detail in upcoming videos. There's the income statement. There's the balance sheet. We'll look at those in your upcoming videos. There's a statement of cash flows, a statement of shareholders' equity, and then all of those notes to the financial statements. So in the notes, here's an example of what's in the notes. You see on the income statement that revenue in the most recent year was $107 billion, $412 million, because these numbers are in millions. So the revenues at Target are 107.4 billion, 107,412 billion. In the footnote, here's that total, 107,412. So you say, hey, I saw that on the income statement. How does that break down between the departments? Well, clothes, 16.485 billion. Beauty and household essentials, toothpaste, paper towels, etc. 31,284,000,000. Food and beverage. The grocery store in Target generated sales of 23,899,000,000. Hard lines, that includes electronics, toys, entertainment, sporting goods, and luggage. And then electronics includes the video game hardware and software. Home furnishing and decor. And then other miscellaneous stuff of 213 million. Okay. And then there's credit card profit sharing and other of 942 million. So that's how the revenue, that's what the footnotes do, is they take a line on those financial statements and they provide much more information. And it goes quite long, as you can see. All right, and that's the big stuff that I wanted to show you today. The rest of it is a bit legalese. So I hope that you find these interesting. Again, it is an honor and an important duty to society for we CPAs to audit these financial statements, and then inside the company for CPAs to prepare them. It's quite an honor, and we are going to, in this curriculum, prepare you for that valuable and important and lucrative role in society. Thank you for your attention. In the next video, we'll look closer at the balance sheet at Target.